So you were getting ready to go down this path. Let me tell you a quick story, and then you can lead in the next one. Happened to be in a wedding out in Colorado, and the wedding's done. Now we're driving into reception. The reception's in Boulder, so we have a 20, 30-minute drive, whatever. There's going to be this great spot for a big, wedding picture, right, on the side of the mountain, whatever. So all the bride and the bridesmaids are in one car, and the groom and all the groomsmen are in another one. We all meet at this point. We're going to do this picture. And we're like 26-ish, I think, at the time. Someone has this brilliant idea for all the guys to create this human pyramid and put the bride on top for a photo. Wouldn't that be cool, right?
Oh, no.
Oh, geez.
Uh-huh. So we do it. We take the photo, and as we're dismantling, well, let's just say the base layer crumbles.
Oh, no.
And the bride's going head first, face plants, and all of a sudden you just whoosh, the entire back of her wedding dress splits wide open.
Oh, my God.
Yeah.
Oh, no.
Needless to say, they're no longer married. And I'm not laughing.
Was that before the wedding or after?
After the wedding, before the reception.
Oh, geez.
Yeah.
So probably not done with pictures yet.
Yeah. So gets up, of course, the entire backside showing, dirt, grass stains, everything on the front. Like, not happy.
Well, I mean, she chose to get on top of the pyramid.
It's just true.
I mean,
It's a fair point.
we all make our own choices in life. She chose to marry him.
It was an omen. Life's better now, but yeah, there are a few of us saying that's not a good sign.
Yeah. Oh, well.
Yeah,
They gave it a good run.
they didn't have you as the minister. That would have balanced it out.
That
That would have made things right.
I think so. Right.
Yeah, pastoral Purdue Pete. I like it.
There you go.
A little side gig.
Little side hustle.
Yes.
Pastoral Pete.
I mean, insurance, weddings.
Yeah.
Joe.
Bar mitzvahs, bat mitzvahs.
There you go.
All the things.
This is my first and my last. I am never, ever going to do this again. It is causing.
Never say never.
You have a certificate.
Yeah.
From what website did this certificate come?
I just Googled
SallyStrothers.com.
Yeah.
I just Googled it, and I mean, it literally is, hey, here's how you do it. What's your name?
Yep.
What's your email? You're ordained. I mean, there's no background
We'll
check.
get your money. Yep.
You don't have to take a 10-question quiz and
Nothing.
maybe get 50%.
No.
The only questions were name on card, card number,
Yep.
expiration date.
100%.
That's
And
great.
please pay $20 or
Yep.
whatever.
Oh no, it's free. But some
It's legit then.
some states require proof of.
An ordained minister of
So
some
you got to
sort.
spend
So
$30 for a packet.
Yeah.
Okay.
So I bought the packet.
Yeah.
Yeah.
Are you ordained in any manner of a religious affiliation, or is it literally just
No,
your
Joe.
name was on a piece of paper?
It's on a piece of paper.
Right.
You and I both know I'm not ordained in any religious affiliation.
I'm thinking if Cindy and I want to renew our vows,
You're still on the list.
Yeah.
I'm calling you if we ever do that. That work?
All right.
I got us a minister. We're good.
I love it.
I think what he just said was, well, 25 years was a great run. Let's just end it now.
Do you have that insurance? Never mind. I didn't say that. We might have to edit that part out. All right. You were getting ready to tell a story, though, real quick, I think. Or not.
Oh, no. We were talking insurance, and we were talking about
You were talking about divorce insurance.
yeah, but that was a thing. So I believe it was called wedlock. And I mean,
Should have been called Wed Unlock.
I was going to say, who buys that? It's like, hey, honey, let's get married. Let's buy some wet divorce insurance. I mean, that's awful. But anyway, what it ended up failing because,
the carriers lost money on
well,
it.
that ended up failing because, insurance is all about selection, right? And, the couples that think they're going to get divorced are going to buy it.
Yep.
So you've got a lot of unhappy couples buying divorce insurance. And then, the payback wasn't, real strong. So I think it was let's call it $2,000 a year. And, if you pay into it over a 10-year period, you're paying $20,000 into it but the divorce benefit to pay for, legal bills, etc., was like $25,000. So, someone smart just said, you know what, park the $2,000 in a savings account.
Can you imagine when the annual premium letter or invoice comes in the mail and you're sitting around the dinner table at home and you're like, damn it, honey, I've been paying these premiums. We got to either cancel this or get off the horse and let's get divorced. Like, we're not getting our money's worth.
Yep.
Was part of the questionnaire like, who is your minister? Oh, yeah, you're sorry, you guys are uninsurable.
Yep.
I guess.
All right, well.
I'm just trying to think of what your wife, like the day you got that certificate and showed Lori, it was just like her dreams come true.
Well, and maybe the couple isn't involved. Maybe it's just one person buys the insurance and doesn't tell the other. I don't know.
Aha.
I think that's stupid. I think it's
Well, if one spouse has to secretly buy an insurance policy without the other spouse knowing, maybe that marriage was destined to fail anyway.
hence the adverse selection,
Yeah.
right?
Yeah.
Yeah.
Hey guys, welcome back to another episode of the Industrious Podcast. Thank you all for joining us from wherever you guys get your podcasts. If you happen to be joining us from the Assessa YouTube channel, thank you for doing so, first of all. Second, if you haven't hit the subscription button or that little notification bell, please do so. It won't cost you a dime. You don't have to buy divorce insurance, none of that stuff. So we appreciate it. Today, we are joined by our friends at AssuredPartners, Mr. Judd Feldman and Noelle Perkins. Welcome to the Industrious Podcast.
Thank you.
Thanks for having us, Vince and Joe.
Yeah, you're welcome. Thank you. That was a long, cold open.
It was.
I thought we were getting ready to wrap up. And, we've talked employment, we've talked sales, we've talked, banking and finance, we've talked economics and inflation and supply chain, and we've talked divorce insurance. So we have hit the full gamut of topics now.
Pretty much. Yeah. So you're welcome, folks. Hey, why don't you guys give our listeners and viewers a little background info on yourselves and on your business?
You want me to start this time, or do you?
Sure.
All right. So my name's Judd Feldman, and I'm the agency president at AssuredPartners. I was appointed agency president in 2016 after they bought my company, Colliance Risk Advisors, in 2015. Indianapolis, pretty much raised, went to Purdue, met my wife there, Lori, who said, "You're doing a podcast on insurance? Who the heck's going to listen to that?" I'm like, you're probably right, sweetie.
Noted.
Yeah, noted.
I'm also going to talk about wedding ministry as well, though.
Yeah. Gosh.
Thank God we had that to fall back on.
I know. 3 daughters, Lily Reese Gwen, 2 at Brebeuf, 1 at St. Luke, and very excited about talking insurance with you fine folks today. So thanks for having us.
Can I just ask one question? On your business card, does it now say Judd Feldman dual threat? Just curious.
I'll look into that. No, it doesn't.
Okay. We used to add that.
But dual threat meaning ordained?
Insurance guy, wedding guy.
Wedding guy.
Not golf, baseball.
Not golf.
No,
baseball.
no Bo Jackson here.
No Bo Jackson.
Oh, God.
Insurance. You've got something there. I mean, I could clean it up.
Think about all the the couples who can marry, and then you could sell them all the insurance they need for their home.
Oh, absolutely.
Auto, life.
Oh, there you go.
Clean it up.
There you go.
At the reception, just crush insurance.
Got apps.
Got apps.
Filling apps out.
So speaking of cleaning up, segueing for your introduction, how much like just mess of his do you have to clean up just on a regular basis.
That face said that's a whole nother episode.
Yeah. Yep.
She's a good one.
I am a good one. He'd be lost without me. And I remind him of that
There's some truth to that.
daily. Noelle Perkins, Vice President of Property and Casualty at AssuredPartners. So I oversee operations. Been in insurance my entire career, so 20 plus years. Grew up in mostly in Fort Wayne, Indiana. Went to school at St. Bonaventure in Western New York State, and kind of made my way out west. So lived in Seattle and insurance there as well. Worked for a company that got acquired by AssuredPartners in 2016, and had 2 little ones at the time. So decided to relocate back to Indiana, and got in touch with Judd, and decided to make the transfer, and took on a bigger role. So it was a good opportunity for me as well, and my family. So,
How did you guys meet? Was it part of the individual companies being acquired by the same parent company?
Right. Yeah. So when I started thinking about relocating, I talked to someone in my current office about, do you know who runs the Indy branch? And I think Judd had been appointed probably 3 months before that. So he actually flew me out, and we met, and kind of hit it off, and just decided to move here. And he famously, we've told this story a bunch of times, when I decided to move, at the time, I was what we call in our industry account executive. So it's kind of a higher technical level client management. And then I ran a small team, and he said, well, we have this director of operations role that I think you'd be good for. And I said, no, I don't want to be in charge of a whole department. And I have, a 10-month-old and a 2-year-old. We're moving across the country. I mean, we're doing all the high stress life events that you can do, right? So he's like, okay, no problem. We'll do the AE team lead. And so got back, kind of talked over with my husband. We decided to pull the trigger. So he sent me my offer letter and job description. There's 3 job descriptions on it, one of which was director of operations. And so I called him and said, I think there's a mistake. I'm pretty sure I said, no, thank you, very nicely. And he said, oh, it'll be fine. If you don't like it, you can always change. And then 7 years later, the role keeps getting more and more.
It's so funny you said. I was like, and then I got my business card and said director of operations.
Yeah,
I was like,
yeah,
huh,
yeah.
That's interesting.
But no, Judd's good at seeing potential and the potential people have, and developing them. So it was a good move.
He is a minister, though.
That's true.
So you grew up in northeastern Indiana, but
guys
you went to
love
St.
it.
Bonnie's.
Yep.
What drew? That's not a.
No.
They don't pull a lot from Indiana in general, I wouldn't think.
No, so I went to Homestead High School,
Okay, yeah.
which is on like the southwest side of Fort Wayne.
Yeah.
And
yeah. Home of the Lohman family.
I swam with Libby Lohman.
Did you really?
Yeah.
Wow.
Yeah.
We know her brother,
yeah, Jim.
Yep.
Which one? Jim. Okay, yeah, she's got
who was
3.
also a freak athlete.
Yes, they all are very
cycling,
athletic.
swimming, all
Shout
that.
out to the Lohmans.
Yes,
Dropping
yes.
some names on the podcast.
Yeah, yeah. No, I swam with Libby, pretty much. Yeah, the whole time I lived in Fort Wayne. So,
Okay.
but yeah, a lot of people went to IU or Purdue, and I just wanted to kind of do my own thing and not go to a college where not that you would see a bunch of people from high school. Obviously, those are 2 big campuses, but my brother went to Xavier and swam his freshman and sophomore year, I think. He's 3 years ahead of me, and he told me, you should check out St. Bonaventure, because they were both in Atlantic 10 at the time, and St. Bonaventure women's team won the conference every year. So he said, it looks like, they're having fun. And so I went out there for a recruiting trip and just loved it and decided to go there. So yeah, that's how I ended
cool.
up there.
All right.
You were actually the second person in Indy that I know that went to St. Bonaventure.
Oh, really?
Yeah, isn't that crazy?
You'll have to put us in touch, because there's not a lot of
I was
us in
gonna say,
Indiana.
yeah. I can do that.
You know Pat Sedlak?
There you go.
What?
That was the second one.
All right.
Right.
We're just going to out everybody on our
Yeah.
podcast today.
Sedlak's another insurance guy. He should be here.
Okay, for those listening to the audio version of this podcast, Judd is drinking from a water bottle that is, I've never seen such a big.
It's got to be 64 ounces at least.
Good
This
Lord.
isn't on video?
Well, it
Oh,
is.
it is.
Now
It
people
is.
are going to want to go to the YouTube channel just to
Yeah.
see that.
Well, we're getting followers in there for you.
I mean, good Lord. Do you spend, how many hours a day do you spend in the bathroom recycling
He's
the
trying
water?
to one up Ricky Fowler.
I mean, I go through 1 or 2 of these a day.
You're so healthy.
Really?
You look healthy. Oh, I
Thanks.
don't know what the insides look like, but
They look better than
All
they
you
did.
see is the outside, though, baby.
The inside looks better than the outside.
All right, let's get this train back on the track, sort of. Talk to us about the state of insurance. I mean, what's new? How are things going? What's your guys' forecast for how things are looking?
Well, I mean, like I said, I've been in this industry. I mean, you've been in this industry your whole career too. And in the last 3 or 4 years, at least on the property casualty side, we're finally seeing a hard market. So things are
Define that.
So capacity is being limited, meaning the amount of insurance that's available, like in the reinsurance market, and then rates are going up for the first time in my whole career, really.
I'm sorry, rates are going up for the first time in your career. Can you expand on that as a consumer of insurance, who I feel like we get annual increases?
Yeah.
I'm sensing a disconnect.
Well, are you talking health insurance or property and casualty insurance? Because health insurance has been steadily going up, but P&C historically, depending on your losses and things like that, it's been relatively flat or just going up slightly. But 2020, like excess insurance immediately went up. Property's been going up because of all the hurricanes and wildfires and all the catastrophic events. So it's just up, and no end in sight, really. Mm-hmm. So it's not a great market right now for insured. So it's up to us to kind of come up with solutions outside of insurance, whether it's captives or taking on higher retentions or things like that.
So we talked offline whether you did call it personal, residential, consumer insurance, or commercial insurance, and you kind of said all of it, both. Where do you got? What's your most familiar sandbox? Is it truly all of it, or do you really feel like you specialize or put a lot of your emphasis on one side or the other, consumer versus business, for the lack of a better term?
Yeah, I mean, I think it's every market's a little different. So AssuredPartners, we're a couple $1 billion company. We have offices all over the United States and in over in Europe as well. I would say combined, we are more property casualty focused. Well, maybe not focused. So I would say 60+% is property casualty. 30% is healthcare, employee benefits, HR advisory services. But that's probably our fastest growing space. So, and then, we have, personal lines, so homeowners, auto, and then an entire non-retail sector, branded accretive, that focuses more on, the wholesale marketplace.
Gotcha. So on the 30%, you said healthcare, benefit advisory services. Are you in that space? Are you a broker of medical and beyond insurance, or the carrier?
Yep.
Okay.
We are.
Mm-hmm.
Okay.
Yep.
So what is that? I mean, that's the really probably the biggest hot button of all the insurances out there. The biggest hot button right now is going to be, at least as business owners, and then also as consumers, and hearing it back from our employee base, it's all about medical insurance for the most part. For those whose ears perked up listening to this, for the 3 listeners we have, Judd.
I don't even know if you have that.
Well,
for this one, I mean, we lost them.
Yeah.
But I figured the 2 of you were going to listen, so that took it to 3.
Yeah. All right. I'll listen.
On the medical piece, what are you seeing trending for what will be renewals coming up here, 4 or 5 months from now?
I don't really work in this space, to be honest. Judd and I are both property and casualty, but you're obviously more exposed to it as agency president than I am.
Yeah.
I'll retract my question.
Let's talk property.
Yeah.
No, I'm just kidding.
Okay.
No, I mean, look, I think, again, every market's a little different. I think more employers are going to, be forced to take on more risk, right? So in the past, where you've just transferred everything to, the insurance company, smaller employers will, take on more risk to contain cost. And then, just look at their employee population and address, health trends, adverse health trends, and support programs that, improve, the overall health and well-being of their employee pool. But like as Noelle said, I mean, we're not, on the employee benefit side, but it is to your point, it's a hot topic for all of our clients.
So then
Sure.
shifting back to the property casualty side, you brought up catastrophic events, acts of God, hurricanes. We're hearing and reading stories about carriers, both kind of small regional carriers to household names that are pulling out of state markets, pulling out of California, pulling out of Florida, places, the states that have probably absorb the biggest impact of these natural events. What is that going to do for everyone else? Are you feeling a trend that's going to occur, or is there going to be consolidation? What is the impact going to be both on us as consumers, but also business owners who have physical property, who have liability insurance, who carry inventory, things like that?
Mm-hmm. Yeah, I mean, I think you're going to see retentions or deductibles go up considerably. So you are going to take on more risk to keep your rates manageable. Carriers, they want a good spread of risk, so they're going to want accounts that are outside of those states. But those accounts are still going to see increases, which they always say, well, I'm not in Florida. And we have, clients that joke as soon as they see a hurricane start, going on the news, they're like, oh, great, my rates are going up. But, the carriers need that spread of risk. But reinsurance rates are going up. I mean, this year, the first half of the year, I mean, we saw a lot of increases, but I'll be interested to see what happens the second half because capacity is, drying up essentially. So, and we're, going to go into another hurricane season. It's just each year they're just getting worse and worse, and the events are getting bigger and bigger. And I mean, billions of dollars of losses each year, whether it's the wildfires or the hurricanes. So yeah, I mean, I think consumers are going to be taking on more retention. So just, improving risk control as much as you can. But again, if you're in those states, there's not a whole lot you can do to prevent a hurricane coming, but just mitigating your risk as much as you can if you are in those states.
So rent, don't own is what you're saying.
Yes, yeah.
You guys, your customers, your partners span a wide range of industries, correct? What are you hearing from them in terms of what the market looks like the rest of this year? I mean, no one's crystal ball is perfect, but you're exposed to a lot of different industry insights. What are they saying? What are you hearing?
Well, I think on the manufacturing side, with the cost of capital, I think there are some delays there in terms of, their CapEx budgets. Anything that was, any project that was, what's the word I'm looking for? In the works, I guess. Any project that was in the works maybe 12 months ago. Let's just say they wanted a machine. They're going to wait 3 years to get that machine. So, the supply chain and other things are gonna play into that. But imagine paying multi-million dollars for a machine and not getting it for 3 years.
Right.
So we're seeing a lot of delays there. The construction industry, where we do a lot in the construction space as well. Finding good people. The labor market's tough. Fortunately, we do a lot of street and road work, and our clients are very active in that space. So, the infrastructure bill is creating a lot of work for those industries. So,
right. And that's not a short-term thing.
No,
That's going to go on for years.
That'll go on for the next 5 years
Yeah.
for sure.
When you said on the equipment side, they're gonna have to wait 3 years. They're placing the orders,
Yep.
but there's just not enough supply. Okay, because we're seeing a big increase in equipment purchases just in the markets that we kind of deal with, because if nothing else, it's replacing humans that they can't find to hire. And it's trickling down even to smaller shops that normally wouldn't be automating. The price point of the machines have come down, and it's like, well, if this thing's going to run 15 to 20 hours a day, every day, it's going to do the work of 2 or 3 people. The math kind of works out now.
Yeah.
Okay. Yeah, that's crazy. What advice are you guys giving your customers right now?
Again, I think making sure they understand how to be a best-in-class risk, because everyone's going to get rate increases, but the poorer risk, the ones that don't have good loss control, don't have good measures in place, are going to get a bigger rate increase. So if you can show the carriers that you've invested in safety and loss control and other things, it's just going to make you a better risk. So, you have a lot, they underwrite you, and you probably have a lot less chance of losses and things like that. So you're a more profitable risk for them. So just, spending the money on that as much as you can. Obviously, dollars are tight and inflation's up and interest rates are up and borrowing's more and all that. But the more you can do to kind of set yourself apart from your peers, the better.
Do you have any good examples of that?
Well, so like on workers' compensation, you're measured by what's called an experience mod. So if you have a lot of losses, your mod's going to be over 1. If you have very low losses, your mod's going to be under 1, which means you get like a credit. So, having someone who's dedicated to safety, not just an HR person that does safety, does insurance, so having someone that focuses on that to keep employees safe, can drive your premium down. I mean, that's something that you can track and you can see that. So, that's one example I can think of.
Yeah, cyber, I think another really good example.
Mm-hmm.
I mean, these attacks become more sophisticated. Coverage and capacity becomes restricted. And there are tools out there that help employers, and there are several local independent insurance brokers who have invested in these kind of tools to help insurers, or insureds, I should say, prevent attacks or identify attack before it becomes an event through those scanning tools.
Yeah.
The best-in-class risk discussion, that's more on the, client retention side of things. But, just as far as like in terms of client acquisition side of things, it's we get excited. And sadly, our industry has become very commoditized. Now, we're very lucky, I guess, from the business community's perspective, that there are many very good local independent insurance brokers who I believe who I believe approach the business in this way. But it's just empowering buyers to make good decisions. And because we're so commoditized, Joe, you could get a call every day asking an agent to quote your business and tell you that there's something, cheaper, but, helping you understand, the time that it's going to go into securing that quote. Is it going to be apples to apples? Is the underwriter really going to see your risk? Have you ever met the underwriter? There's a best-in-class way to approach the market, and there's a way not to. And sadly, I believe a lot of employers go into the marketplace uninformed and sometimes create more harm than good. Is that fair, Noelle?
Yeah, I think that's fair.
Yeah.
Yep.
Yeah, we live that world in our business model. I mean, price versus value, or price versus cost, not the cost of material, but the actual cost of the decision you made when price was your leading decision criteria. We are not a price club on our end. We try to provide additional value to our client base, because anyone can sell coatings and chemicals in a bucket. I mean, speaking of something being a commodity, it's just, what are you getting out of it? The adage, you get what you pay for, kind of a thing.
Mm-hmm. Yeah.
Wonderful. Well,
any other way we can really jazz up this insurance discussion?
I wanted to shift. I've just been dying here because I want to go back to something that I don't know if it was caught on the cold open or not. But
was your Halloween costume last year, which was unbelievable, by the
don't
way.
be jolly.
It was unbelievable. I mean, those tattoos on your face, they look so real.
All right, so let's stick with you though. So I wanted to make sure we talked enough about insurance because I wanted you guys to obviously have your time to give insight as to what you do. But in the back of my mind, I kept thinking, 77.
Yeah.
I want to know how many holes that really was for.
18.
18.
I'm not messing with
Full
you.
length holes? Or like a par 3 course?
Dude, full length.
Oh, yeah,
holes.
it's an executive course. Okay, that makes sense now.
Guys, played. It was, I couldn't miss.
Throwing darts.
Dude, couldn't miss.
Nice.
Peterson, Schaefer, your personal lines insurance agent, he was with me. He'll vouch for me.
I'll ask him.
You should. You should. And if he hasn't told you already, your rates are going up.
Because of that round.
Because he lost some money? Oh, great.
That's awesome.
Oh, boy. Anyway, all right. Well, thank you guys for coming in and sharing some
brave.
insight. We appreciate it.
Thanks
Thank
for
you.
having us.
Appreciate
you're
it.
welcome. And thank all you guys for checking out this episode of the Industrious Podcast. Thank you for tuning in. And don't forget, if you're on that Assessa YouTube channel, hit the subscription button, hit the little notification bell so you can be alerted when new episodes like this one drop. We would greatly appreciate it. And it doesn't cost you a dime. Your rate will not change, I promise. Thanks a lot. Don't forget, be industrious.